Economic red flags, breakdown of stability and fundamentals. Hello, my friends. This is The Art of Prepping. Today we're talking about red flags within the economy. And a lot of us have seen some of these. Some people are just not aware of others. And this video is for those who are kind of new to the concept of economy and how things work. And so this is just a real basic overview of some of the concerns that I have and a lot of other people who are into preparedness, especially people who follow the markets. There's a lot of concerns about the direction that we're going here in 2020. At the time of this video, we're getting toward the end of August of 2020. So just to kind of put that out there so you have like some data point of kind of the perception that I have at the time of this video. So I first want to start out with currency. And here in the US, we have a lot of currency printing going on. Much of it is actually digital currency, but there is some being printed and in excess. And the printing of currency is in the hope, though, to fix economic liquidity and debt foreclosure. But the problem is, and this is something that just continuously surprises me, that we haven't learned from the history of the world that you can't just print yourself into prosperity. And you see the Federal Reserve doing all kinds of different measures. They have different programs going on right now. And they're trying to print themselves out of this issue that we have, which is really more of an economic depression is what we have with all the unemployment and all of just the limitations of trade between other nations, just all kinds of problems. And so when you have governments, or in the case of the U.S., the Federal Reserve, trying to print your way out of harm's way and into safety and security, it just doesn't work because it does several things that are very negative. It brings down the dollar index, and that helps to cause inflation. And if it continues over time, you can even have hyperinflation. You can even have a collapse of a currency. This could move toward a breakdown in society in various ways, and it pushes toward a reset, an economic reset, which may not always be in the best interest of some people. So at the time of this video, just to give you an example of inflation, food prices are really starting to soar. And just at the last grocery visit that I did a couple of days ago, a lot of foods were up as much as 40%. So this would very much qualify for inflation. In fact, it's right there on the line of hyperinflation in some sense. So it's very concerning, though, how food prices and other commodities have soared. Now, there are others that have gone down, relatively speaking, in terms of the recent past, like gas prices. You know, fuel, at least in my area, it's below $2 a gallon for just regular unleaded fuel. So that also is an indicator that there's a sluggish kind of economy when there's not a lot of demand for a lot of the essentials, such as fuel. People aren't going around and driving as much as they used to. They're not traveling. They're not doing as much business. That's a big concern, right? So definitely when you pay attention to the dollar index, it reflects the inability to buy as much as we used to with it, especially with other countries. So not really a good thing to see the dollar index down as much as it is. The next thing I want to talk about here is the run-up within the major indexes in the stock market. So I'm just going to use the S&P 500. You know, that's the one I'm the most familiar with. I follow that pretty closely. And if you look at it, though, most of the stocks in the S&P 500 are down, even though the index overall is at an all-time high. How can this be? because actually there's just a select handful of tech stocks within that S&P 500 index that have really popped, that are really overvalued. There is some rationale because of all the COVID-19 happenings. There's a lot of people that are doing business at home. They have enhanced their home-based office, and there's all kinds of reasons why tech stocks are going up. But if you look at the fundamentals, though, there's really no underlying fundamentals for the level of increase that they've gone up. And so this is another indicator of a false recovery that's in the works. And what this really means is that there's really bubbles within bubbles. So we have, if you kind of step all the way back, just the stock market in general as a whole is in a bubble. You have the major indexes within the stock market. They are certainly in a bubble, massive bubbles. And then there's individual stocks within those indexes that are overinflated. They're just overbought. The price to earnings ratios don't make sense. And in many cases, actually, you have a lot of individual companies that their stock is trading at levels that have never been seen before, that are just completely irrational. Just for example, that Tesla has a larger value than Walmart. I mean, that doesn't make sense. It really doesn't make sense. So there's a lot of concerns here about just the fundamentals. Just the fundamentals are really just confused, and people, and it's what it seems like it's less of an issue like with commercial investors. It's not like the commercial investors are just piling in there and inflating all of these funds and individual stocks. It looks like on a lot of levels that there's individual investors that a lot of which don't really even know what they're doing. They're just going with emotion and they're just buying in. Maybe they had extra money from all this stimulus money, or whatever, and they're just throwing money into the market. But the problem is that you don't want to buy at the very top of a bubble, right? So when this busts, a lot of people are going to have a lot less money than they started out with. And that kind of defeats the whole purpose, right, of investment. So I also want to touch base on the run on precious metals. Now, at the time of this video, there has been a pretty substantial pullback, but I do believe that these pullbacks are very healthy, and we're going to see a lot higher numbers in the near future. But in particular, gold, silver, and platinum, the ones I'm really kind of focusing on here, these are the real big safe havens, right, throughout history. And these are considered real assets, real money, not just currency. No, this is real money. It has intrinsic value. There's a limited supply of this, limited availability. And so this is a top hedge. I mean, I'm cautious to say that precious metals is the best hedge against inflation, but it is one of the top, because you can also, put back food, and you can also learn skills and trades that are worth a lot. They have a lot of value. So, but if I had a top 10 list, precious metals would be in the top 10 list as a really awesome hedge against inflation and counter the instability of a Federal Reserve, money printing efforts, their campaign, and their reckless economic policies that they keep pushing as if they can't figure out that they're going in the wrong direction. They don't allow the free market to self-correct. And there's mechanisms in the free market that allow this, that it actually is kind of self-regulating. If things get out of balance, it over time corrects. But the Federal Reserve is actually not allowing the free market to find a homeostasis. It's not allowed to find a balance because it keeps influencing the market by buying assets or promoting certain companies over others, which is really not the whole point of the Federal Reserve, or even any government is not supposed to pick and choose who wins. And so if you wonder why there's problems, it's because the policies are really counterintuitive, because they don't work. It doesn't make any sense what we're doing. But, I have a hard time believing that all this is done by by just, error, that, oh, they didn't figure it out. Like the Federal Reserve doesn't know what they're doing. No, I think they know exactly what they're doing. They're not dumb people. They're doing this on purpose to destabilize the U.S. economy. So you can go from there and extrapolate what you will, but I think it pretty much ends in a very negative way. I now want to transition over to the stimulus. Various funds and monies that have been given out to businesses and individuals over the past few months. Of course, there's talk at the time of this video of another stimulus to individuals, a second wave of checks. We'll see. But this is, once again, not the role of government. They're not in a place that they're supposed to manipulate the market, to influence the free market. This is not their role. This is not appropriate. Right, to bolster the national debt because of politics. And yes, there are people hurting. So I'm not trying to, undercut that or minimize that. Yes, there's a lot of good businesses that are struggling. But this is how the world works, is that you have businesses and individuals that should fail. You see, because they didn't plan ahead, or maybe they don't even have a good business, so they should fail. This is part of the self-regulating of a free market, is that if you can't make it, you can't make it. And some of this is very sad. I get that. But if you just allow everyone to succeed, even all of the failing businesses, then what do you get at the end of the day? You get a real big mess. You get a lot of mess. And you get a very sluggish economy long term, because you have a bunch of businesses that are really stifling the growth of other companies that are actually worthwhile. Now, when it comes to individuals, this is very debatable, but once again, I don't think the government should be in the place of bailing out individuals or just sending a bunch of money to people, because once again, it causes inflation, especially when the U.S., has a massive amount of debt to begin with. Should we incur more debt just to float people in the short term? I don't think that's a good idea. That's not sound monetary policy. But of course, since when have we done that though, right? So there's a lot of people who are not able to weather an engineered economic collapse. And that's what it really is. I mean, this is pretty closely related to previous recessions, in the sense that they were never really fully allowed to just process through, and allow people to fail. So, that's why I don't have a lot of sympathy for, a lot of companies, because they've been kind of granted for many, many years now help at various levels from government to keep going when they really should have failed. And on the individual level, yeah, it's really hard sometimes to keep up with all this, to stay solvent. But this is an engineered economic collapse, so that's why it's even more difficult than normal. And so, you don't just close down a whole country for months and expect that there won't be any kind of fallout. I mean, what kind of policy is that? So we'll probably see, in the history books long term, that what has been done here was engineered on purpose, and it had a worse effect than if we were allowed this virus to just burn out. And that's what we're seeing right now in most places. It's on the downturn. And of course, there's a lot of other countries in the world that have already kind of went through their wave, and they don't have any more problems. So it's amazing how the U.S. continues to have like multiple waves, according to certain people, or at least one strong wave, and they're still struggling. It's like, okay, so why is the U.S. having this long battle with COVID-19? And of course, then you look into all the fraud, the testing fraud, and the reporting of numbers, the fraud everywhere. We don't really even know how bad this really is. It may not be that bad at all. We do know that a lot of people in nursing homes have died. A lot of these people were in bad condition to begin with, but still. So we do know that there was some problems, but it looks like there's just more to do with sensitive populations. So do you close down a whole country, for months and destroy an economy and destroy people's way of life? I mean, it's debatable if that's appropriate or not. I don't really think it was appropriate. I don't think it currently is. I mean, they're still talking about, closing things down again, even though we're on their way to recovery. It's kind of like bizarre how all this is playing out. It certainly, to me, seems engineered, planned. And so the result is a suppressed GDP. The performance of the gross domestic product is pretty horrible right now. And of course, that reflects unemployment and businesses that are completely going into bankruptcies. There's so much debt right now, it's not even funny. The financial markets are really, they're at records. A lot of them are at record rates, and I'm just like, wow, the bubble will burst at some point. I mean, we're at record numbers in a lot of the indexes, and people think it's a buying opportunity. It's like living in like a twilight zone. And what's really concerning, though, is the disconnect. I think the disconnect is possibly even worse now than it was even a few months ago between Wall Street and Main Street. And I do see that the quality of life for a lot of people is going down. Now, this is not to say that people aren't working. On my street, I pay attention to people who leave in the morning. I take a morning walk, and I see the bulk of the street leave in the morning and go to work. So there's like over 80% of my neighborhood that I've seen in the morning leave. So people are working. I'm not saying this is the case for everyone. Of course not. There's a lot of people unemployed. But then there's a lot of people that have no incentive to go and find a job when in some cases you're making more in unemployment. I mean, wow, than your own regular job. So this is just some things I wanted to bring up. For those who don't really keep up with stuff, this is kind of like a little intro to some of the economic red flags that a lot of preppers kind of look at. And so just wanted to recap this particular whole concept that there is a breakdown in progress. Stability is becoming less and less. And the fundamentals of the market mean less and less to economists because they can't even follow the fundamentals to even predict the future because the fundamentals are so skewed. So in recap here, we have a concern about the currency printing. We also have concerns about the inflation and the collapse of currency, the run-up of the major stock market indexes, and certain individual tech stocks, which are in massive bubbles. We also have precious metals. When you see people running to a safe haven like precious metals and the price is going up, as they have been in the last couple months, that's a big red flag that people are trying to run to safety, and they're trying to get out of the dollar. They're trying to get out of fiat currency. And they also may believe that the stock market isn't a safe place, so they're trying to get their money out and into something that's really real. It has something that has intrinsic value. We also have the stimulus monies and efforts from government and the Federal Reserve to bolster individuals and businesses in terms of financial means, which really is increasing debt and just causing more complexities, going back to more money printing. It's just a vicious cycle. It doesn't help anyone. They're not allowing the markets to just self-correct and balance. And lastly, we have record unemployment, bankruptcies, massive debt issues, and the disconnect between Wall Street and Main Street has possibly never been as extreme. So, hey, I just want to thank everyone for your support. I wish you the very best, and just try to do what you can to protect yourself from this economic chaos, because it'll probably linger for some time. This could go on for years before we get into some type of recovery. People think this is a recovery right now, but this is, in my opinion, not a recovery. This is a bear run right now. It's a very intense bear run. Typically, we don't see first wave bear runs get this intense after a major pullback. But there's a lot that's feeding this bear rally. And once again, we've talked about it. There's a lot of infusion of cash in terms of stimulus monies. So there's a lot of artificial pumping of liquidity in the market, which is causing a lot of this uptick in the stocks. But don't believe it for a second. Don't believe that this is a genuine value. Like this is what the stocks are really worth, because you can just go back into history and look at the P&E ratios, for example, and there's other indicators that we are in territory that is extremely dangerous. We're possibly toward the top of a major bubble. So I would not buy into the stock market at all. And what's also really incredible right now is money markets. For those who are in investments and stuff, money markets are yielding in a lot of firms a negative rate right now. Yes, after you take away the cost of the fund, it's actually in the negatives. So bizarre stuff going on right now in the market as of August 2020. You guys take care.